Hey, welcome everybody to the client support webinar for June 14th, 2023. Great to have you here. All right, so big day today on interest rates, right? How many people think rates are going to remain flat? And how many people think they're going to go up 25 basis points? What do you think? What do you think? Always, I'm not going to tell you what I think until you tell me what you think. Oh boy, let's see. It is kind of a toss-up, I agree. You know, it's funny. We got a lot of people in here. It's almost 50-50. Isn't that amazing? Some say up, some say flat. I'm going to say flat. All right. Apparently, what was I reading? Either the Fed Watch or most market participants at this point think it'll remain flat. That doesn't mean it's going to be, but that's where they're calling it. And I kind of think, especially with the wholesale inflation numbers so good this morning, in other words, showing inflation has cooled off, that I think they may keep them flat because I think they're worried about putting the economy in a recession if they keep raising them. And also, it is affecting the housing situation and it's affecting banks a little bit. So I think they may hold them flat, but we'll see. Anything is possible. All right, so let me quickly go through our administrational items here and then we'll get going. So first thing I got to cover, of course, are the risks involved in trading. There are risks. We want you to realize that risks are in the markets, both whether you're trading or investing. It is possible to lose some or all your money trading the financial markets. Past performance does not guarantee future performance. And also, we want you to check with your financial advisor or money manager to be sure what we suggest or talk about here is suitable for you. Some things may be, some things may not be, but they know your personal situation to make that kind of decision. Also, too, make sure you're trading with risk capital. It's the money you can afford to risk in the markets and know how to do risk control. We can help you with that. I got a bunch of books on risk control as well as on Elliott Wave and different forms of technical analysis. Also, the art of trading, which is on my tools, and also on honing your skills to become a great trader, called The Art of Trading, is due out later this year. Brand new edition by Wiley. I have a lot of software, many of you here, that's why you're here, because you own it. All right. So just a little thing on the software, you know, if you have art or have some, but not all of it, you know, you can always add to it. Some people buy them all at once. Some people buy the bundles, but you can always add to whatever you got. So if you see something you like that I'm using, you can go check out our software. We now have 2 websites dedicated to that. We have an area on traderscoach.com and also one on appliedrealitytrading.com. So those are dedicated to our software. All right, so any questions coming into today? What do you think? Any questions? All right, Jim, I think you had a question on TD Ameritrade and the data going into Ninja. And so you were asking about what I would recommend for data on Ninja. This is the TradeStation platform. Let me just go into Ninja for a moment. This is NinjaTrader over here. So in terms of data, here are the connections for data. All right, I use MyKinetic and I use also for futures, I have a futures account with Ninja. And so when you have that, they give you what they call a continuum data feed for futures. And so that's what I use. You know, they also have end of day free data for Kinetic, so you don't have to do anything but connect to that. But I do have a Kinetic account and a My NinjaTrader Continuum account, and I find them both very good. Okay, so that may be an area where you can look into. And you can get with Kinetic, you can get real-time stocks. You can get all bunch of different markets. So you can, when you sign up for that, it is a fee for that, especially if it's real-time data. So you got to pay all the exchange fees and things like that. So there is a fee for that. There is not a fee for end of day free data, but you can get what you want through that. TD Ameritrade, I know you were having trouble with the TD Ameritrade being slow. And we hear that a lot. Unfortunately, with the TD Ameritrade data, apparently a couple things go on over there. One is, obviously the data is free and you can export it into NinjaTrader if you have a TD Ameritrade account. But the problem is two things. One is we found that sometimes they throttle back the data. In other words, it's free data for them, but it's costing them money. So they throttle it back in a variety of different ways. The speed of delivery to third-party applications outside their TD Ameritrade realm, and also they throttle it back on the number of symbols you can look up or have open on your charting platform. So that type of thing. So speed and number of symbols. Usually, if you call them and complain about it a little bit, they'll speed it up a little bit or do something on their end to make it a little better. But it's still, I don't think, as good as other data providers coming into Ninja. Okay. So Jim is telling you they throttle it back to 120 symbols. Okay. Well, there it is. All right. Thank you. I didn't realize the exact number, so that's good to know. So, that's, there you have it. All right. And Jim also is throwing in another note up here saying they told me they really can't help him in terms of, I guess, increasing that number, right, Jim? Or even the speed at which it's delivered. Okay, that type of thing. So there you have it. So generally, at that particular point, you're left to finding another data provider. And there are others out there, but I find the Connecticut data works great. So I use that. So that's something you probably want to look into. And to get that, you just go to NinjaTrader. You can type in Google search, Kinetic data, and then sign up there. If you open up a trading account, then you can get the futures data. And I think they use CQG for that, which is really good data. And I think while you're opening the account, they give you a temporary CQG data that you can use until the account is funded and opened. So you can get going fairly right away on looking at futures. And it's good data. We use it for day trading, and it's very good. Okay, so in fact, I've got the micro crude oil up here right now. Okay, nice short trade down to the target going on. This is a 1 minute time frame and a 5 minute time frame. So anyway, let us know if you need any further help with that. But that's kind of what you want to do. And Jeannie's pretty good at that too. So if you get stuck a little bit, Jean can help you with that. Okay, she's dealt with the administrational side of that quite a bit. Basically, anytime I have a problem and need somebody to get on the phone, I have Jean do it. Okay, she's much better at it than I am. So that's what I would recommend.
Well, all right. Thank you, Ben.
Well, it's true. It's true.
But yeah, Jim, I'll be happy to help you with that.
Yeah, I can't stand getting on the phone, in terms of being on hold and waiting and all that kind of stuff. She's much more patient with people than I am. So I always have her do it. All right. So hopefully I answered that question. Okay. And Jean put it in the chat as well. So I think I covered all the bases on that. All right. Let me open it up. Anybody else have any other questions? Okay. What's cooking out there? All right. I think last couple sessions we went over the indicators, and I think I finished those, right? So I went over the OWL, I went over the PTF, we talked about the trendline master and the ERI, and I think we kind of covered those. Anybody having any thoughts or anything they need me to help them with on those, or anything else for that matter, let me know. Okay, Elliott Wave, I can help you with Elliott Wave and so forth. So that's the whole point of having a session like this. Templates, are you pretty good with setting up templates? Okay, everybody seems pretty good with that. Just so you know, our software installer, Mark, when he goes onto your computer, he will usually set up the platform to kind of look like either what I have here on TradeStation, on Ninja, or what I have on TradeStation. And the color of the background, that's just a personal thing. I like black too, but usually I use white when I do webinars because I think it goes over it's better for a webinar, it's more easily seen, I think. That's been the feedback I've been getting. So that's kind of why I have my chart set up as white, but you can set up anything you want, okay? Then I have radar screen running here and so forth, so I have all that. So, you know, that's kind of the deal with that. Pretty straightforward. Boy, quiet group. Everybody must be doing good today. All right, well, how's everybody doing with their trading? Certainly the Nasdaq's been doing pretty well, right? That's been going up. Amazon's been doing well. Google's been doing well. I think they're due for a pullback, but they certainly have done well. Let's go to some of the position trading charts here. Let me just put the data window up here. So let's see what we can look at here. Let's take a look at Google real quick. Another one we like is Ford. So we like that one too these days. That's done pretty good. But I think Google, based on a fib extension up to the wave 5 target zone. So in terms of Elliott wave 3, okay, 4 we think is finished, and we're going to trickle our way up to 5. So that type of thing. One thing I want to address here that's probably good to talk about is that, you know, a lot of times by the time you feel either comfortable going into the markets or even you find the markets, a lot of times prices can be pretty high based on where your stop can go, right? And that's because you're getting in late. So there's always a risk when getting in late that you're going to get stopped out on just a normal pullback that should be expected. So it creates a problem of where to put your stop, right? So if you put it too close and increase your trade size, then problem is you're going to get stopped out probably before you ever reach the target zone. If you put it too far back, your trade size will be so small that it hardly makes the trade worth it. So it's always that issue. And there's two ways to solve it. One is try to get into markets as early as you can. All right. So look for markets that you know are in an Elliott wave 4, have pulled back, or flat markets. You know, a lot of markets come down, they bottom, and then they go. Okay. So UNH is a great example of that. Natural gas is bottoming. It's not ready yet, but eventually it will trend to the upside. And if you can get in early, you just put your stop at what you think is the bottom, and it can't get any better than that, right? But that's not always the case. And Google is a great example. Ford's another one, all right? So what do? Let's take a look at Ford. I mean, what do you do in a case like this? Okay, if we open up Ford, this is another one that's now bounced off. Not quite as bad as Google, but there is another one that's bounced off. Amazon, let's take a look at that one. So there's going to be times by the time you find the market, for whatever reason, it's already come pretty significantly off its bottom. And to put a stop way down here lowers your trade size. So what do you think would be, what's one way you think you could handle that? Anybody? Because it happens to me too. Options, right? You can use options. So an option, the benefit of using an option, and you don't have to get fancy, you can just use a simple call option. So the idea here is you figure out whatever time, I happen to be a weekly time frame, but you know, if this was a daily time frame, it would apply here as well, or a 60-minute, whatever. But the idea here is that when prices get so far that a low stop is not practical, you could buy a call option, and then you don't have to worry about your stop, provided you are only risking the same amount you would lose on the trade when you buy the call option. So in other words, if you had a $50,000 account and you didn't want to lose more than 2% on that trade or any trade that you take with that account, then your loss, your maximum loss on a 2% of 50,000 is $1,000, right? So that means when it comes time to buy a call option, you buy $1,000 worth of it. That way, if by chance it expires worthless, the most you would lose is the same amount that if you had a normal stop out. But it allows you to get into the trade late so you don't miss it in case it doesn't pull back. And at that particular point, you're in it without the necessary stop needed. So you wouldn't use a stop at all. And then you would get out hopefully when it reaches the target zone. So when buying an option, that's one way of doing it. You always have to take into consideration the time frame. So this is a weekly. So if I expect it to get way the hell up here on a weekly chart, I've got to give this a lot of time, right? So I don't want to buy an option that expires in 3 months. It has to be a lot longer than that. However, if I'm trading a 60-minute chart and I'm getting in late, and this is way too late on the 60, but if that would be the case on a 60, then the time would be different because I would be probably working off an Elliott wave on the 60-minute time frame. Okay. Now, here's one thing I'm going to recommend with options. You need to hold the option or plan to hold the option overnight in order to use options. It's pretty impractical and impossible, not impossible, for the most part, impractical or statistically improbable that you will make money if you try to day trade options. And that's because the market makers pad the option bid and ask based on the current day's volatility. And so as a day trader, you're trading that volatility and it's hard to beat them at their own game. They make it so they're going to win more often than not. However, once you hold the option overnight, okay, you're outside their model. And so it really is okay to buy the option at that point because they're not padding it enough to know what tomorrow's volatility or price action is going to be. So when you buy or sell options, it's better to do it on positions where it'll be more profitable, generally speaking, to do it if you hold the option overnight. Okay, that's just, in trading, if you're trading it, okay, that type of thing. All right, so that's basically one way you can enter markets if you get in a little late, or just if you enter the market and the stop doesn't make sense based on what you're trying to do. Okay, so a little key level there. All right, anybody have anything else? Everybody good on Elliott wave for the most part? Psychology, anybody having psychology? Is psychology giving you a tough time? Oh, here's a good question. Okay, day trading psychology. Well, day trading is a lot different than position trading. And the reason for that, there's a couple reasons for it. One is that in day trading, when we day trade markets on a very short time frame, it doesn't matter what market, okay? It really doesn't. It could be the E-mini, it could be crude oil, it could be gold, it could be NASDAQ, whatever it is. There's two problems really associated. One is that, well, actually, there's more than two. One is that you need to be in front of the screen for the most part. So that's going to cause a little fatigue. So you got to have a good energy level to do that. The other problem is the feedback comes at you very quickly in terms of you having to make decisions at times. All right, so you need to have a lot of structure when you want to enter and exit trades so you can follow those rules consistently. The other thing is that you're going to be more subject to fear and greed because you're going to be watching every price bar. So again, you have to deal with that. Now, if you have attention deficit disorder or you get impatient in the markets or anything like that, all right, I suggest you're going to probably have a difficult time day trading certain time frames. And believe it or not, if you are, the more impatient you are, the lower the time frame you should use. And you can go all the way down to a 15-second time frame. The reason I say that is because it allows people that are impatient less time for their impatience to kick in and have them do the wrong thing. So if I'm trading a 5-minute time frame and 5 minutes seems like it takes forever, I'm more likely to take a trade out of boredom or make a decision based off of impatience. However, if I'm trading a 15-second time frame, I'm getting signals a lot more often. And so therefore it allows me to trade my structure because I'm going to be trading the signals and I won't have time to be impatient to trade my emotions. So, and you can test that for yourself. We all have different relationships with impatience, right? So you have to kind of know yourself a little bit to know what kind of trader you are. Some people don't like to trade the 15 seconds. It's too fast for them. They don't want to expend that energy. So they can trade a 5-minute time frame and let it go and just, move their stops down without it affecting or getting pulled in and doing the wrong thing with their emotions because they're just different, okay? So everybody's different. So you have to kind of know yourself a little bit when you day trade and see what that kind of feels like. All right. So time frame selection is not always dependent upon the market cycle. It can be dependent upon your psychology and what you like to do. Because if you trade, a handful of futures markets or stocks, and you're trading a 15-second time frame, well, you're still going to be able to find trades based on patterns, but it's going to be on that 15-second time frame, so you can actually look at a lot of different cycles. So if you're out of cycle on one time frame, you'll have another market to look at. All right, so that's just kind of something I have found dealing with traders, because I do a lot of coaching with traders. I've been doing it for now, over 23 years, I guess. So it's kind of interesting what you come across, and it's interesting because you see a little bit of this, how the different types of folks, trade differently based on their own personal psychology. So that's kind of interesting. So that's something to keep in mind. In terms of trading short time frames, now when you're learning or testing an idea, sometimes trading the short time frames can be good because it can give you a quicker test period. In other words, if you have to do 30 trades in order to see if something's working or not, if you use a daily chart, that's going to take you quite a while, right? If you use a 1-minute chart or a 5-minute chart, that test for 30 trades will come a lot quicker. And because of the fractal symmetry in the market, you should be able to get an accurate test even on a 5-minute time frame. So sometimes when testing things, I'll do that. I'll drop down to a lower time frame and get the quick skinny on the stats of how it does. And then if I find something that works out good, then I'll start applying it on the daily. I'll test it on the daily at that point, and see how it does there. And then if that passes the muster, then I'm good to go. Okay, so sometimes going to the lower time frame is a good way to ferret out quickly what can work and what does not. So try that, which will kind of be surprised at how well that can help you. All right, anything else? All right, so Jim wants to look at at SH. Okay, let's take a look at SH. And he's saying the risk reward is huge, even if the Elliott wave says it's too early to get in. Okay, well, let's see. Give that a second. All right, very funky price bars. Okay, see these? This is showing me very low liquidity. But the reason for that is because that's an intraday time frame. So this is one you would not want to day trade. Now, if we go out, and that's how you know whether you can day trade a stock or not, very quickly, okay? So this is the SH now on a regular position trading multi-time frame analysis type of setup. So I've got the daily once again in the center and the 60 on the left and the weekly on the right. So the SH is the inverse of the spider, right? Okay. So let's see. All right. So here's the situation here. Let's see what we got cooking here. Let's open up this daily chart. You could open up the weekly chart too, but we'll see what we got cooking on down here. So big move down. I think I'm gonna have to do the weekly chart. I got too many price bars on that bad boy. So give me a second. Let me scoot that over. All right, let's open it up here and see. So you had a little bit of a bounce here, didn't you? Okay. And you have a green PTF, which is kind of interesting. All right, so looks like this move down probably was a 3, 4, maybe a 5 down here. This could have been a 3 inside the 5. 5 may or may not be over, but the PTF is green. So you kind of, it's kind of interesting on this. It'll be interesting to see if it makes one more low or if this bottom holds. Makes one more low, it may be powerful enough to turn this back to the red side, but it's green for now. So let's see. I think for a long trade here, you got an active pyramid on the weekly chart, right? So right away, if you go against that, you got to be very careful, and you only got to go in with a very small trade size, and you have to realize that you're going against it. You have to realize the only way you go against that is if the lower time frames are telling you to take a trade and you're trying to get in early off a bottom. But for right now, we're still kind of hovering right around the bottom. So let's just take a quick look and see what the other time frames are showing us. So they're bearish. Okay, the 60 is still bearish, and this is bearish. So kind of interesting. This could be a bottom. We could come down a little further, double bottom, and then go. That's very possible. The other possibility is I want to open up the 60 for a minute. Yeah, we're getting pretty far down. You have bullish divergence even building inside here a little bit, from here to here, but you have red here. So you don't want to go long yet, okay? I don't think I would go short here either, okay? I don't think I would go short here. I would wait, I think, to see if, because it's pretty much at the inflection, if this is going to turn around or if it's going to go lower at this particular point. So tough one this is a tough one because this could be a 5 bottom, not a 3. And if that's the case, that's a bottom. So we'll have to wait and see. Yeah, and so that's going back to 2007. So we'll see what happens with this. All right, so that's kind of where I would play it. You're right. You don't want to go long yet, but this is one you can keep on your watch list. And if things start to turn around in terms of this getting more bullish, that means the market will be selling off, which of course, if you know me, I think that's eventually going to happen. So we'll see what happens. Okay, that helped, Jim? And if you can get in early on this, that would be really good because as you can see, it's a pretty, at this particular point, it's been pretty volatile in the daily chart as well. So you kind of want to get that stop away from that volatility if you can. In other words, putting it as far away as possible. But if you can get in early, you can put the stop at the bottom. Okay. Thank you. Good. All right. Well, I think I'm not seeing too much else coming in, and I think good session today, but we're at the half an hour mark, so I know people are busy on Friday. So I think we'll go ahead and call it a day. Now, don't forget, if you have any problems, you can contact our support team. You can run a ticket on that, or you can write down the question and come back here at any time. But I appreciate everybody being here. Really good turnout today. We usually get good turnouts on our client support, which is super. Love seeing everybody here. And we'll see you back here next Wednesday, okay? And don't forget, Fridays, we have our YouTube channel where we do the Stock Analysis Friday, where we look at stocks and pick our winners for the upcoming week. So you definitely want to attend that. It's a great source to find good upcoming stocks. And if you're not already a subscriber on our YouTube channel, please do subscribe. Gene, you can stick a link in there in the chat area before I end, and everybody can subscribe so they get reminded of when that will be. And that's Stock Analysis Friday. All right, everybody, have a good one, and we'll see you back here next week.